Finally, let's talk about the owner's equity section of the balance sheet. Owner's equity is also known as shareholders' equity or net assets. Why would it be known as net assets? Because it's equal to assets minus liabilities. It's also known as net book value. So several interchangeable terms. We'll stick with owner's equity for now. There's two sources of owner's equity. The first one is what we call contributed capital. This is capital that owners have invested in the company. It actually is the net of two items that we might run into on the balance sheet. One is capital stock, and that's the amount of funds that the investors have invested in the company by giving the company cash in return for stock. Treasury stock is the amount that the company has paid to repurchase or buy back that stock if it has decided to do so for some of its stock at some point in time. But importantly, first source of owner's equity, contributed capital from the owners or investors. The second source of owner's equity is what we call retained earnings. These are earnings that the company has generated over time and retained inside the company instead of paying back to the owners in the form of dividends. I like to say the accounting folks are pretty clever when they name things, and this is a perfect example. Retained earnings, the amount of earnings the company has retained rather than giving back to the owners in the form of dividends.